Hey, this is Rochelle, and welcome to Multiple Passive Streams of Income. It's definitely been a while. When I started this channel, I was doing Amazon FBA, and I tried wholeheartedly to make that business work. I kept running up debt, thinking I'm one step away from profitability, but it never happened. High inventory costs, high pay per click rates, and increased competition made that goal unreachable. And when I finally had to stop, I had inventory in the US, Canada, and Great Britain, and to dispose of it turned out to be a daunting and expensive endeavor. So it took me quite a few years to pay that debt back and get my footing again. In the midst of trying to get out of the mess I created, I came across the infinite banking concept, IBC, aka Be Your Own Bank, BYOB. And I knew I had to add this to my financial toolbox, but I was in so much debt, I couldn't afford it. I kept looking at videos, mostly Chris Noggle. Videos, check him out if this video entices your interest. Trying to find somehow I could afford this. Before I tell you how I am affording it, let me tell you why once I learned this existed, why it was a no-brainer, and why I had to figure out how to afford it. So this journey started with me coming across Wealth Factory videos and buying an ebook about the Rockefellers and the Vanderbilts. Long story short, the Vanderbilts squandered most of their wealth and the Rockefellers didn't. And one of the financial tools they used to ensure their wealth would never be squandered was whole life high cash value insurance policies. On the screen, I've listed all the benefits offered from a specially designed whole life high cash value insurance policy. All excellent benefits in my opinion. But the one that stood out most for me from the very beginning was the uninterrupted compounding guaranteed growth and the never not paid dividends. Let me spend a few minutes on this. I know of nothing else that produces this result. Let's focus on the word uninterrupted. When you make payments into your policy, part of those payments pay for the insurance and the other part adds to the cash value of the policy. That cash value grows at a guaranteed rate and also receives dividends, which adds to the growth. If at any time I want to borrow from my cash value, I can relatively do so easily and my money will grow uninterrupted as if I never borrowed from the cash value. So how does that happen? When a person borrows from their cash value, the insurance company gives you a loan against the policy, so your money continues to grow without interruption. Do you know how valuable this uninterrupted privilege is? I hope this gets you fired up and starts a journey for you to look at the financial possibilities of having a specially designed whole life high cash value insurance policy. So why would the insurance company allow this? First of all, the insurance company is charging you interest, so they make money from the loan. The insurance company is loaning you money against your death benefit. So even if you don't pay it back, they will get their money upon your death by taking it from your death benefit, so it's a win for them no matter what. So your next question may be, why would I borrow my own money? Here's why. Most likely, there will be at least one time in your life where you need access to money, and by borrowing from your policy, you accumulated that money to do so. So that part of it is like a savings account. You have some money set aside. Just like a savings account, there's no credit check or credit worthiness to use the money. If you decide to replenish your savings account, you can do so at your own pace. You can do the same with your cash value loan. If you miss a payment or all payments for that matter, there's no credit blemish or negative reporting to your credit report. This is a loan, so it's not income, so it's not a taxable event. The loan is simple interest, so compared to amortized interest on a credit card, this loan will cost you far less for the same amount of money. On the screen is a comparison of a simple interest loan versus an amortized interest loan. So why would you want to put this debt on a credit card or refinance a house to get the money you need? You are paying yourself back to reuse this privilege again and again, and hopefully you will find opportunities to use this money to make money and not just to borrow in a time of need. So again, why would I borrow my own money? Because life may cause me to have to, and getting the money in a different way is going to cost me a lot more than borrowing from myself. I know this is a major hurdle for people to rationalize, borrowing money from themselves, and I hope you can begin to understand why you should be the bank and not allow the bank to control you with debt and unfavorable loan terms that makes it very hard for you to ever pay them back. Pay yourself back, give yourself the flexibility and favorable terms of your loan to yourself. And with all that said, I can't stress this enough, and most importantly, your growth is uninterrupted, so your money continues to grow while you have borrowed it on simple loan interest, flexibility of repayment, no credit effect if you miss a payment, no effect on the loan-to-income ratio that your credit report bases your credit score on. So let me ask this question differently now. Would you be a fool to not borrow from yourself? You cannot accomplish this access to money and receive continued uninterrupted growth anywhere else, and I haven't even focused on the compounding aspect of the uninterrupted growth. This is one of those paradigm shifts that once you get this point, you will not stop until you get one of these policies. I will make more videos about specially designed whole life high cash value insurance because there's so many layers to it, and it's that important for all people to know about it. I hope that everyone who has come across this video will at the very least have the curiosity to want to find out more about specially designed whole life high cash value insurance, and ultimately it is my hope that everyone adds one to their financial toolbox. Thanks for your time, as I know you could be any other place right now. Take care.